You've seen the headlines. AI IPOs are coming. And now you're wondering how and when this massive wealth generation is going to hit the East Bay real estate market. You may have seen this home in San Francisco that was on the market for just under $3 million. But did you know that the sellers advertised that an accepted form of payment could include shares of OpenAI or Anthropic stock? Let that sink in for a second. We are living in a moment so unusual that private pre-IPO AI company stock has become real estate currency in San Francisco. And what is happening there right now, even as I'm filming this, is heading directly across the Bay Bridge into the East Bay housing market, into Oakland, into Berkeley, into Lamorinda and Walnut Creek, and eventually into the Tri-Valley. If you own a home in the East Bay, or you're trying to buy one, this video is the most important market update I can give you right now. If we haven't met yet, I'm Jenn Collins. I help people buy and sell homes and figure out where exactly they want to live here in the Tri-Valley and throughout the East Bay. Most of the people we work with are either relocating, upsizing, downsizing, or just trying to make a smart move without regretting it later. And that's exactly what this channel is here for. I want to be upfront about something. This is a different type of video from my usual content. This is not a neighborhood tour and it's not a buyer's guide. This is a market intelligence briefing based on the most current data we have as of June 2026 and what it tells us about where the East Bay real estate market is headed in the next 12 months. I'm going to cover what's happening right now in San Francisco because of the AI wealth boom, how and why it's already spilling into the East Bay, and my honest predictions for the inventory, pricing, and deal flow in this market through mid-2027. So let's get into it. To understand what's coming to the East Bay, you need to understand what is already happening across the Bay. Anthropic confidentially filed for its IPO on June 1st, 2026. OpenAI filed on June 8th. Both are pushing towards $1 trillion valuations. San Francisco's own chief economist said these IPOs could generate more than $10 billion for the city in the coming months. And that's before a single share has been sold to the public. The wealth effect is already happening. San Francisco median home prices rose over 14% year over year in March of 2026 to a record $1.7 million, the highest and fastest rising in the country. For the 3 months ending in May of 2026, median prices were up almost 15% over last year. Sales of homes over $5 million are up a whopping 69%, comparing the first quarter of 2025 to the first quarter of 2026. And homes at this price point are not selling for hundreds of thousands of dollars over the list price. They're selling for millions of dollars over the list price. A home in Pacific Heights listed at under $4 million recently and sold for over $7 million. One real estate advisor told Marketplace that there is a 3-year backlog of supply in the ultra-luxury segment. Roughly 50 buyers are chasing fewer than 10 $20 million properties available in any given year. About 70% of the ultra-luxury transactions are actually happening off-market entirely. This is not a normal market. This is a concentrated, once-in-a-generation wealth event that's being unleashed on a city that already didn't have enough housing. And here's what always happens when that occurs. Buyers get burned out. They get priced out of the market, and then they start to look elsewhere. They decide it is time to cross the bridge, and they bring with them their budgets and their bidding mentality. The San Francisco Standard reported on April 28th, just 2 months ago, that buyer burnout from San Francisco's real estate market was already pushing buyers into the East Bay. That's what's coming. Actually, it's already here. We recently had clients offer on a home in Lafayette. The list price was $2,150,000. It had 14 offers. And while unfortunately our client wasn't the winning offer, it sold for $2,810,000, $660,000 over the asking price. And it was all cash. This is happening more and more frequently throughout parts of the East Bay. This is the dynamic. San Francisco buyers are arriving in the East Bay with their San Francisco psychology, accustomed to paying 20, 30, even 40% over asking. And they are escalating prices in ways that many East Bay buyers who have never competed against that mentality are simply not prepared for. The inner East Bay has median prices currently in the $700 per square foot range, versus nearly $1,100 per square foot in San Francisco. That gap, roughly 36% cheaper per square foot, is exactly the value proposition that is pulling well-capitalized buyers from San Francisco across the Bay Bridge right now. But there's more to this story, because the AI wealth effect is not uniformly positive for everyone in this market. Redfin has documented what economists are calling a K-shaped housing market in the Bay Area. Since the launch of ChatGPT in November 2022, luxury homes, those in the $3 million to $8 million range, have appreciated 13.4%. At the same time, the most affordable homes in the Bay Area, those in the $500,000 to $600,000 price range, have actually fallen by 4%. What this means for the East Bay specifically is that the spillover demand from San Francisco is concentrating in the most desirable, most walkable, most lifestyle-rich East Bay neighborhoods. The Oakland Hills, the Berkeley Hills, Piedmont, and through the tunnel into Lamorinda. Right now, it's these pockets that are absorbing the wealth effect most directly. Neighborhoods that don't check the lifestyle boxes that San Francisco buyers are seeking, they're farther out, they have fewer amenities, they don't actually have the walkability or architectural character that buyers are seeking, they are just not seeing the same dynamic. This is important. If you own a home in a premium East Bay neighborhood, the next 12 to 18 months might be the most favorable seller conditions you've seen since post-pandemic peak. If you own in the lower price tier East Bay property, the picture is much more nuanced. The Redfin senior economist put it plainly. It's another sign of a K-shaped economy taking shape in the Bay Area, with AI lifting the fortunes of some households and neighborhoods much more than others. Okay, here is what I believe the data tells us about the East Bay market from now through mid-2027. While of course I don't have a crystal ball, I wish I did, this is what I believe will happen given the way we've seen markets like this play out in the past. Prediction number 1. Desirable East Bay area prices will be up 8 to 15% through mid-2027. The neighborhoods I mentioned, Rockridge, Oakland Hills, North Berkeley, Piedmont, and Lamorinda, are all directly in the path of the San Francisco spillover wave. That wave is already moving. The IPO lockup expirations, which will hit roughly 6 months after Anthropic and OpenAI go public, will likely release another flood of liquidity into the market in 2027. I believe that the premium East Bay corridors will see appreciation in the 8 to 15% range over the next 12 to 18 months. Prediction number 2. Inventory will stay critically tight. Here's the supply problem. The same sellers who would have listed their homes in a normal market are looking at a bidding war environment and asking themselves, where do I go? If they sell their Rockridge home for $1.8 million, where do they buy next? San Francisco is more expensive, Lamorinda has tight inventory, parts of the Tri-Valley are rising too. Move-up sellers are hesitating, and that hesitation keeps inventory constrained at exactly the moment when demand is spiking. Expect fewer than normal listings in the premium East Bay areas through spring of 2027. Prediction number 3. Bidding wars will return to neighborhoods that had normalized. Parts of the East Bay that had settled into a more balanced, one-offer, reasonably priced market over the last 2 years. That's parts of Oakland outside of the top neighborhoods, parts of San Leandro, parts of Castro Valley. Those are all going to feel the spillover pressure as buyers who get outbid in Rockridge and other premium areas expand their search radius. You can expect overbidding to return to markets that had previously taken a breather. Prediction number 4. The Tri-Valley sees a secondary wave in late 2026 and into 2027. The direct spillover hits the inner East Bay first, but as inner East Bay prices run up and inventory tightens, the next layer of buyers, particularly those with school-age children, will move their searches into Danville, San Ramon, Pleasanton, and Dublin. The Tri-Valley already has South Bay tech buyers arriving from the south. They're about to get the San Francisco spillover wave from the west as well. I expect Tri-Valley prices to accelerate in the fourth quarter of this year and into the first quarter of 2027. Prediction 5. Oakland rents will continue to rise. We've already have data showing Oakland rents are up 6% year over year between May of 2025 and May of 2026. As purchase prices rise and the rental market absorbs displaced buyers, the those people who are looking but can't compete and therefore stay renters longer than they planned, that upward rent pressure will continue. I expect Oakland rents to increase into 2027. Here's the bottom line. The AI IPO wave is not going to happen. It is happening. The wealth is already in the market. It's already crossing the Bay Bridge, and it's already showing up in the East Bay offer prices and sales results. The actual IPO lockup expirations, the moment when thousands of newly minted millionaires and billionaires can actually sell shares and deploy cash, are coming in 2027. We are in the early stages. If you're a seller in a premium East Bay neighborhood, the next 12 to 18 months might be one of the best windows to list in years. If you're a buyer waiting for this market to cool because of the IPOs, is probably the wrong strategy. The evidence suggests that things are going to get more competitive before they get less so. So if you're thinking of buying, I would start now. And if you're sitting on the sidelines trying to figure out how this affects your specific situation, your specific neighborhood, your budget, your timeline, that is exactly what I'm here for. My contact information is in the description. Let's talk. Please subscribe if this kind of current market coverage is useful to you. This is exactly the type of content I'm going to be making as the story develops, and it's going to keep developing fast. I'd love to hear from you. Are you feeling this in your neighborhood already? Are you a buyer who's been outbid once, twice, or more? Share your stories in the comments below. If this video helped you understand more about the East Bay housing market, hit that thumbs up button and subscribe for more videos like this. It genuinely helps this channel reach more buyers who need this information before they make the biggest financial decision of their lives. I'm Jen with the Jenn Collins Group, and we help people make smart, confident moves here in the East Bay, whether that's next month or a year from now. If you're planning to buy or sell your home in the East Bay, I'd love to guide you through the process. Call or text me at the number below so we can schedule a strategy session. Thanks so much for watching, and I'll see you in the next video.